This committee in the House of Representatives passed a bill that goes a long way in addressing these regulatory issues, and I congratulate you all for working this through. The case cannot be stronger for the Senate to also pass GE reform legislation. Congressional debate about expanded GSE authority should take place within the context of comprehensive GSE reform. It would be irresponsible to expand GSE's business without addressing the fundamental problems of their regulatory structure. The mortgages facing the greatest stress today are those with the weaker underwriting standards, where borrowers have imperfect credit and little equity in their homes. Legislation would be required to allow the GSEs to purchase mortgages that are above 80% loan to value and have no credit enhancement. This would require that the GSEs take on significant credit risk beyond their traditional experience. Legislation that encourages them to take on more risk must also create an appropriate regulator to exercise necessary oversight. The GSEs can expand down the credit curve without legislation if they reevaluate their underwriting standards and develop new products. Again, this would mean taking on more risk. A GSE guarantee for these products would increase the liquidity available to refinance some subprime borrowers, and we are encouraging the GSEs to do more in the subprime area. However, we recognize that the GSEs must fully evaluate the business risks associated with any new initiatives balancing their private and public missions. Some have suggested that the GSEs should be permitted to inject some liquidity into the jumbo mortgage market. There is no doubt that raising the loan limit somewhat to allow the GSEs to guarantee jumbo mortgages would be helpful to a segment of the market which has shown some recent improvement but is not yet functioning as normal. GSE's limited entry into the sector would likely improve liquidity and would clearly be attractive to the GSEs from a business perspective. Traditionally, this has been a profitable part of the mortgage market with low default rates. For that reason, it seems logical that this market will right itself in the weeks and months ahead. Therefore, consideration of this issue should be limited only to a temporary provision that is part of legislation strengthening the regulatory structure. We agree with you, Mr. Chairman, on that. We should also recognize that lifting the loan limit for even a short period has the potential to detract from GSE's affordable housing mission and displace private sector participation. Recently, there have been calls on the administration and the Office of Housing Enterprise Oversight, OFAO, the GSE's independent regulator, to lift the temporary caps on the GSE's retained portfolios. The business motivation for this request is clear and sound. Whether this request will have a positive impact on the mortgage market is much less clear. There is already ample liquidity in the prime conforming marketplace, the marketplace in which the GSEs concentrate their investment portfolio business. The securitization efforts of Fannie Mae and Freddie Mac have been a huge contributor to this liquidity. The more efficient use of their capital to ease current market strains is in the guarantee business, where each dollar of capital goes further in adding liquidity. Yesterday, OFAO announced steps to adjust Fannie Mae's investment portfolio cap and to provide more flexibility to both enterprises in managing their investment portfolios. If the GSEs want to be helpful, I hope they will use this new flexibility to provide liquidity to parts of the market experiencing the most strain. Again, I welcome congressional debate about an expanded role for the GSEs as part of a broader GSE regulatory reform discussion. Today's solution should not create tomorrow's problem. Treasury and the President's Working Group are also examining broader market issues, including mortgage origination, the role of credit rating agencies in securitization, the decentralized mortgage process, and the need for simple, clear disclosure so borrowers can make informed financial decisions. Because these issues have global economic consequences, the Financial Stability Forum, in addition to the PWG, will examine some similar issues, involving the policy implementation for financial institutions, including supervisory oversight principles for regulated financial entities with off-balance sheet contingent obligations. I urge caution, however, as we examine the implications of recent market events and consider corrections. Owning a home is a cherished part of the American dream, and we do not want to unreasonably deny that dream by restricting credit for people who can afford it. Thank you, and I welcome your questions.